Hi, this is Pete Birchler from StockMarketAlchemy.com. Today is October 2nd, Wednesday morning here, a little bit after the open in the U.S. markets, and this is going to be a brief review of the U.S. stock indexes to follow up on the last video I made. So in the last video I talked about a setup where we had the weekly MACD of the S&P 500 in basically a sell configuration where you have the MACD line, which is the light blue line here, below the dark blue line, which is its exponential moving average. And at that time, we had the daily chart in a buy type of signal. So the setup is the larger time frame was pointed down, and then if we see a sell signal on the shorter time frame to align with that larger time frame, that gives us a potential dual time frame sell signal. We did see that cross occur here on last week on the 27th. And we haven't made much progress to the downside since then, but we do have both the daily and the weekly pointed down at this stage. Now, if we dial that down even into an hourly chart with yesterday's rebound, we can see that the hourly chart was relatively oversold on the MACD, though there was no classic type of divergence pattern at the lows here. So we saw the MACD hitting its lowest lows here as price was hitting its lowest lows. So if we are able to see the hourly time frame MACD also cross down as well, we'd have the hourly, daily, and weekly down. Possibly that would give us enough downside strength that we would see the market push below this swing low here if it does exceed that level. But in any case, that setup is in effect on the MACD indicator on the S&P 500 here. The stop on that would go above this level here, and then the question really becomes how the trade is going to be managed or where profit targets are going to be taken. The next support level on the chart as far as the lows is this August low here in the S&P 500. Now moving to a weekly chart of the stochastics indicator. This is something I've also pointed out in recent videos. When you look at the August peak relative to this September peak here, we can see there's a sharp divergence in that we have a higher high in the indexes, yet we have a sharply lower high here in the indicator. As of currently today, we're starting to see the stochastics make a cross to the downside. However, the way I like to use this signal is wait for this bar to close, so wait for this week to close, and if it's still in a sell configuration here, in this case with the brown line below the blue line, and then we see a lower weekly low next week, then that's a potential short signal using the stochastics indicator. So we want to see it close and give us the signal, and then we want to see a lower low to confirm that we're getting at least higher probability of continuation rather than an immediate whipsaw after the close. So all these signals here are giving us indication this market still could be topping. We're having larger scale type of divergence patterns here on the weekly time frame technical analysis of stocks. Now, one of the things that I wanted to point out on a shorter time frame here, if we're looking at a 2-hour chart here of the S&P 500, at the recent lows we've seen here in August, we saw a nice classic bullish divergence pattern here, and that's the type of thing that we will typically see on a full-out correction. Occasionally we see something like we saw in June where we have more of an expanding type of move down with a V bottom, so that's something to look for as well. But at this point, this is either just a very mild correction and it's going to continue higher, or we're going to see this market continue lower and give us more of the classic higher probability signs of some type of bottom before there's a substantial rebound. Now, one thing that I've pointed out quite a number of times over the last several years on this blog has to do with the behavior of price as it touches and reaches the 50-day moving average, and also to some extent the same phenomenon will happen at the 200-day moving average in the stock indexes. So I'm going to show you a pattern here and go back through a few recent similar patterns to kind of explain here. But basically, I believe that these commonly followed moving averages like the 50 and the 200 day moving average are factored into algorithmic or program trading in the markets. And so when price comes and reaches those levels, there often is some type of automated trading occurring at those levels that will create either a reversal or a temporary reversal or a continuation type of pattern in the market. And one of the things that I've noticed just repetitively over the years is once you do have an initial, or let's say this is the end of a leg up here in stocks and we're correcting. What we will typically see is when the market does come down to test, to initially touch that 50-day moving average, is there is some initial program buying that occurs there. However, it's relatively weak, and then if we see price continue lower and make lower lows after an initial reversal, that's a sign that it was just relatively kind of weak automated trading that caused that reversal, and we are likely to see another sharper move lower in stocks once that low is broken. So here's the basic setup. If we look at the S&P 500, this is the S&P 500 cash index, and we see the blue line is the 50-day moving average. And on September 30th, so last week here on Friday, price came down, touched the 50-day moving average, came back above it, and closed above it there. And then on yesterday, we saw the market make a very small gap in a relatively decent up day. But if we move to the New York Stock Exchange chart here, we can see that the volume actually came in substantially lower yesterday compared to Friday. So that is one clue that I've also noticed, is that when we do see the reversal, and then the following day we have a low volume move, that's less likely to be a true bottom and lead to continuation to the upside. And the smaller the up day, the weaker the up day, again, a lot of times that's also a sign that that move is going to falter. So we did have a decently strong up day, but it came on lower volume, so I would still suggest that we may be in for another move to lower lows here. Now, to show you some similar patterns here, just go back to June after this May high. We initially got down to the 50-day moving average, price moved below, rebounded above, and it was a relatively strong rebound in that case, much stronger than our rebound here. But when we came back and broke that low, the low of the day that tested in the 50-day moving average and caused the initial rebound, there was a significant sharp move to the downside. Now, in a continuing trend, in this case a continuing uptrend, those moves will often be just kind of final flush outs. They'll be relatively short-lived, maybe just a few days, but they can be relatively sharp, and they can be profitable if you have a short enough time frame to manage the trade on that time frame. Here's an example of a successful test where it came down, tested the moving average, reversed, created the swing low, and it had a relatively strong reversal the next day, and we never saw another lower low. If we go back to a year ago, after the September high, it came down and touched the 50-day moving average in October. If we zoom in there, so touched the 50-day moving average in October. There was a decent initial rebound off there, but again, once the market came down and moved below that low again, then we saw some significant continuation to the downside. Even if we go back into the April high from 2012, we saw that first move down to the 50-day moving average, stop, market retested it, but once price came back and broke that low, a few weeks later we saw some significant follow through to the downside again. So that's the setup I would be looking for here, is that if yesterday's if Monday's low is broken in the stock indexes here, that I would assume we would see some follow through to the downside, and it may be significant. We may see several percent to the downside before the correction ends. If you look at the chart here, we see the 200-day moving average is rising, and it's currently around 1591 on the 1593 on the S&P 500 here. So the next key support is if we see this low broken and we see any type of significant move to the downside, we want to see whether it breaks this August low. We want to see whether it does that in less time than this move up took to form, as I've shown on this chart in the past. We have if we look at the price logic of the market, October 10th would be the day that's kind of a defining day for us. So if we see prices push down strongly below this August low by October 10th, that would give us some indication that after an uptrend where we're having larger, faster up movements and slower downward movements, that we could have a reversal in trend, as indicated by a larger, faster move, completely wiping out the prior move in less time than that move took to form. So that's something we can continue to monitor here if we do see prices move substantially over the next week or so here. So that's my take on what to look for. The other thing we would look for in the case of that setup, of using the 50-day moving average, is to actually see if we see this low broken or if we see the August low broken, is to then watch what happens at the 200-day moving average. So we may see a similar type of thing where we get to the 200-day moving average and see some type of rebound. We would then want to monitor that low, monitor the strength of the rebound, and then assume that if the low of that rebound is broken, that again there could be some type of continuation to the downside there. So that's just kind of thinking ahead here, but we want to always prepare ourselves for different market scenarios. What if the market continues to the downside? What if the market continues to the upside? Where are our stop levels? What are our typical type of price patterns, and even type of fake out or reversal patterns here, and that type of thing to watch for. So that's my take on a couple things to look for here as far as if there will be any type of further downside movement from this level in stocks. That's all for this morning's update. Have a great day and all the best to your trading.